Then I've got ordinary share dividends and in brackets interim. Now remember, this is where your format plays a major role. Ordinary share dividends, interim dividend, yes, it is an expense, but it is not shown in the income statement. This item is shown in the note retained income. Now, if I go to my information, or my answer book rather, I'm obviously given a part of the balance sheet and I'm given retained income. And as you can see, they want me to show my calculations in brackets. So remember, interim dividend is going to reduce retained income, and that amount that was given to me minus 82,500. Okay. Right, trial balance, nominal account sorted. Let's quickly look at the balance sheet section. So I've got a loan from Nedbank for 363,000. Let's quickly check if that amount was brought down. Yes, it was, so that's absolutely fine. Right, let's go back to the information. Then I've got a fixed deposit, which I'm not going to bring down because remember, I'm not doing the entire balance sheet. Creditors control. Now remember guys, creditors control does affect the equity and liability section of the balance sheet, and this is my current liability. So let's go and bring this down in brackets. So trade and other payables, there's already an amount of 60,000. Not sure what that amount is for, but remember, I'm now going to include my creditors control, an amount of 103,370. Okay, right, next amount to bring down. Okay, we've got Sars Income Tax, an amount of 144,000. Now, often you will not bring down this balance anyway. You will wait until you can determine the tax expense for the year. But in this particular case, right, if we go to our answer sheet, need to show you guys something. So if we go to current liability, as you can see, SARS is going to end up with a credit balance. So in other words, towards the liability, we have made a payment. So next to this, I'm going to put a minus sign, and we've paid an amount of 144,000. Okay, that's the payment that we've made. Right, next amount in the trial balance. I know this is taking a bit of time, guys, but this is important. SARS VAT. So as you can see, we are owing an amount of 10,000 for VAT. Okay, and obviously that affects my current liabilities, right? So I'm going to put that amount under trade and other payables. We are owing, in terms of VAT, an amount of 10,000. Right, and then finally, I think it's the last item now. We've got trading stock that we're not going to bring down a balance just yet because we're not doing the entire balance sheet, as well as consumable stores on hand for stationery on the 1st of July 2018, which is clearly the beginning of the financial year, and we're not going to bring down this balance just yet. Okay, we've done the bringing down of balances. Let's now move on to the important bit, which is obviously my adjustments and additional information. Right, so looking at adjustment number one, a very, very common adjustment, lots of marks. When I say lots of marks, I'm looking at between 3 or 4 marks, sometimes slightly more, depending on whether there's a calculation. So obviously something that you want to get correct in an exam. Adjustment 1 reads as follows. Goods with a selling price of 1,690 Rand, markup 150%, were returned by a dissatisfied customer. The credit note was omitted from the journal but taken into account at the year-end stock take. Right, now clearly guys, you've seen this adjustment in grade 10, grade 11, and now in grade 12. So basically what is happening in this adjustment, you've got a customer, he bought something, he's clearly not happy, and he comes back to your shop and he wants to return the item. So remember, in that event, you've got to obviously cancel the sale, and you've got to cancel the cost of sale as well. Okay, so looking at the actual sale, the two accounts that will be affected is Debtors Control, right? And remember, I'm not doing the balance sheet, so I can obviously ignore Debtors Control. And the other account affected is Debtors Allowance, or we can say sales, right? Because remember, Debtors Allowance has been closed off to sales. Now, in terms of sales, looking at the selling price of the item, right, that the customer is obviously returning, the selling price 1,690, so immediately sales 1,690 will be debited. In other words, sales is now going to decrease by 1,690. Remember, the sale has to be cancelled. So in my income statement, I am now subtracting a further 1,690. Okay, debtor returning the item, the sale needs to be cancelled. Now, when I cancel a sale, automatically I've got to do the same to cost of sale. Remember, if there's no sale, there is no expense cost of sales. So cost of sales also needs to be cancelled. So let's quickly work out our cost of sales. So looking at the information, the markup I think is 150%. Let's quickly go back. Yeah, it is. So remember, selling price times 100 divided by 100 plus markup, which is 250. And that gives us, let's get the calculator out. So that's going to give us an amount of, so 1,690 times 100 divided by 250, and we are getting a cost price of 676. Okay, so 676. So that is my cost price that needs to be cancelled. So remember, two accounts affected, obviously cost of sales as well as trading stock. Right, cost of sales, because I cancelled the sale, cost of sales must also decrease by that amount of 676. Please remember this, guys. We often see students making an error when they are now taking this into account in their income statement. If I cancel a sale, I've got to do the same to cost of sales. So cost of sales minus 676. Right, the other account is trading stock. So remember, stock is coming back into your shop. The customer is returning the item. So your trading stock is now going to increase by 676. Now, even though I am not doing the balance sheet, the entire balance sheet, as you can see, there's obviously no assets, right? I still need to take this into account for a later on adjustment. So what I'm going to do is I'm going to go to my information, trading stock, and next to trading stock, I'm going to put in plus 676. So when I have to calculate trading stock deficit, I know that I first need to add on the stock that was returned by the customer. Okay, right, first adjustment done and dusted. Let's now move on to adjustment 2, and then we'll kind of think of a break. Right, adjustment 2, provide for auditors fees of 56,100 Rand, which was paid on the 30th of June 2019, but not yet recorded. Right, so guys, this adjustment, quite a sneaky adjustment. Why am I saying sneaky? Because normally they would tell you audit fees have not yet been paid. You now need to record this as an accrued expense. But if we read carefully, they are telling us provide for auditors fees of 56,100 Rand, which was paid on the 30th of June. So it was paid, but it was not yet recorded. Okay. Right, so two accounts affected, obviously the expense, auditors fees, as well as my bank account. Right, so let's start off with auditors fees. So auditors fees, remember, your expense is now going to be included in your operating expenses, audit fees. So let's just fill that in. You can call it auditors fees or audit fees, right? And I'm going to record it immediately into my amount column because there's no calculation required, 56,100. Okay, right, now clearly I am not given bank. Okay, so as you can see, I'm not given current assets and there's no bank to worry about. Bank is clearly not an overdraft because if it was, they would tell me bank is an overdraft. So audit fees, if I did have to record this in the balance sheet, remember your bank balance will now decrease by that payment of 56,000, what was it? 56,100 Rand. Okay, right, two adjustments done and dusted. I think let's take a quick break, and when you guys return, we'll obviously, or when we return rather, we will continue with the rest of the adjustments. So I'll see you guys in a bit.